Hello, this is Cryptolyze. I hope you are well this Saturday, September 2, 2023. It is with pleasure that we meet today to talk about the recession and especially the opportunities it will bring because yes, we are going to have a recession in the USA. I am obviously not talking about Europe where we are already in recession, but in any case in the USA, and how are we going to benefit from it? Is it a big recession, a small recession? We are going to project ourselves on the macro currents. Of course, something very strong happened in terms of oil. We are going to look at it. Will have a very strong impact on the month of September and on this end of the year. And we are going to project ourselves on the impact on cryptos. And you will see that there are still quite a few opportunities that will arrive in the coming months. We will have to position ourselves. I've already explained to you that there was going to be a recession. And precisely there I'm going to explain why, how, and for how long, how to take advantage of it. And it starts right away. And we're going to start with oil. Oil, which gave us a very strong week with a bullish break, which was precisely this pseudo range that we had for some time with O'Neill. Retest, rejection, Cradon bearish. We were waiting for potentially going to retest the lower part at $66. But we've already known for some time that if we ever break this level, we'll approach it at a level. It's $93, I explained to you. And I told you that in particular on a breakup, we were going to have a big candle, something which happened. The breakup here of the 83 directly led to the 85. And I think that it is not over. We can have little breaths, but all in all, we're going to go relatively high. We're going to retest these 93 minus 94%. So why does this have a very strong impact? And why is it a sign that potentially we are slowly moving towards inflation in the USA, finally strengthening inflation at the level of the USA, and therefore a recession which perhaps calls into question the notion of this flooding? Again, I put it in quotation marks because we're going to see together that there are still things that are different, but we have here a very strong signal that potentially in August, September, we will therefore have inflation, which will be relatively high or which will be stagnant. And therefore, this implies that we will have a change of position at the level of the Fed and the Fed, which will have to continue either to maintain its rates or to increase its rates. We know that we are currently at 5.5 and we know that they have to increase rates at least once more. And I think that we are going to move towards 2 rate increases to get to 6%, which is very bad. We will discuss this in a few moments, but we must understand that this element is really very important because it implies that the pressure which is being exerted by OPEC, and in particular, we are going to say the general BRICS is working. We have the very strong valuation of oil which is taking place, which began mainly here at the level of June 2023. We really had this big acceleration which began, and we see that it is a strengthening, is not something that is weakening. And if we take a little step back, and this time we are going to move to monthly, we see very clearly that we are heading towards a bullish retest from 93. We see it clearly here in this classic retest. So we could have the establishment of a big range which could be carried out in this style. And again, I am not sure. We will really see if we are able to hold this or not level there. We must understand that we have 2 types of economies that are defending themselves. One, the economy which is based on oil, so which is the case, for example, of Saudi Arabia, where we have a limited supply of oil. So obviously we want a very high oil price to get the most out of it in the minimum amount of time to be able to make the transition in terms of your economy. And next to it, an economy which is based on the consumption of oil, which precisely wants oil which is nearby. $60 minus $70 maximum to have low production prices and precisely controlled inflation. So here we really have the 2 opposites who are confronting each other. And it is a war which fits into this notion of economic war, economic Cold War that we have had for some time between China and the USA, and now between China, Europe, and Russia. Well, we will say the BRICS in general to say Russia, China, but now it is a little expanded with the BRICS. We are talking a lot about the BRICS at the moment in the notion of de-dollarization. I think that we are still relatively far away. We keep the dollar high for a particular reason. The higher the dollar, the higher the rates, the more at that moment there is an interest in owning the dollar, because if there is an interest in owning American debt, the longer we keep this high, the more at that moment we will have a strong dollar. And this strong dollar makes it possible to prevent people from going in any case, to reduce the interest of countries and institutions in moving to another currency other than the dollar. So here we are really in this struggle between the 2. And this is what we see here for me in terms of oil. And it is something that we had already anticipated for some time, and that we said to ourselves that if we had the rupture, it was not necessarily a good sign. And it was for me the first sign of the establishment of this recession in the USA. And when we look at the stock market represented by the SP 500, so obviously big for me, we see that we are in this monthly view, that we are in this struggle that we find here. Certainly we had a very red candle in the month of August, but that was partially reduced, almost to 70%, and we did not close, so we have no monthly reversal. On the other hand, when we start to look a little bit weekly, we see that it's a little less sexy, okay? We have had this question. We can clearly see that we are in the process of retesting an upper part, the upper part, which potentially corresponds here to a continuity. I am just going to shift so that we can see a little better, which potentially represents a retest of 786. Why? For a bearish continuity, remember that we would have A, B, C for a bearish breakout. On this, we could even say and see the beginning of wave 1, wave 2, wave 3, 4, 5 for something much more aggressive. But I tend to think that for me, my target would be the 4,200 to 4,150, which is the big support zone. I have already talked to you about it regularly in my daily newspapers. So for me, we are setting up this idea and this representation of the shock that we could have at the level of the index and at the level of American stocks, which is preparing for a mini recession. Why mini recession? Because in a recession, when you look at representation a little bit, what is it? The classic theme is having 2 quarters of negative GDP and having an increase in the unemployment rate. So here we are still relatively far from it. When we look at this unemployment rate here, we see that we are, so in blue, we see that we are still very low, okay? We are perhaps even seeing a small inflection that we are seeing in a potential increase in the unemployment rate. And here, these are really the important points for me, is that we are now going to think about, okay, all that said, we have an inflationary shock coming. Clearly, we suspect it is being priced by the market. We are seeing it with the increase in oil prices. If we continue and we continue to increase, that means we will have an increase in inflation. This implies that we will have a strengthening of rates and a pivot, which will be delayed, and therefore a risk of entering into recession, which is increasingly strong. Now, we will ask ourselves the following question. It's, okay, this recession, when is it going to start? What the impact will be, how long it will last, and therefore what the impact will be on stocks and therefore on crypto. That's really the goal of this video and how to take advantage of it behind it. That's going to be the end of this video. So what will be interesting, it will be first of all seeing that, yes, we therefore have an unemployment rate which is very low, which is even very, very low for some time. And on the other hand, we see that we are still relatively far away. We still have a GDP which is holding up. Even if we still have a GDP which is falling at the level of estimates of the USA, we have already seen this. But what will be interesting to see is that generally before these green periods here are the US recessions. You have a very nice indicator which notes them to you if you want to work on it, who rates you correctly. These periods of recession, we see that systematically we have low unemployment. And the principle of the recession is the increase in unemployment, which is caused by the bankruptcies of different companies, therefore a form of purge, which is happening in order to then have a stabilization. And when we look, we systematically have these low periods of unemployment. So here it is, COVID, we're not even going to talk about it. I'm just going to remove that. But systematically, we have these periods of stabilization, of falling unemployment, and then we have a small start, and then we have a big acceleration during this period of recession. Period of recession, when we look a little at the last 3 recessions that we had, so the 90s, the internet bubble in the 2000 years, and then the subprimes, we see that these are still receptions which are quite weak. We are talking about 10 bars. So here it is, 10 months. We have a little less than a year. The same here we are, on 10 bars, 10 months once again. And the subprimes, which lasted even longer because it was a banking crisis, which was very hard and which had a huge impact on American real estate. And it took a long time before it started again. We were in 18 months, 20 months, almost a little less than 2 years, a year and a half, between a year and a half and 2 years. So we still have periods which are between, if we look a little more in time, apart from some which were very long, but it is between 8 and we will say 18 months to be quite concrete on this type recession. And when we look, we add other indicators. We will add in particular here the increase in rates, and we will compare the increase in effective rates in relation to the unemployment tax. What's interesting to see is that from the moment we started to increase rates and we see the increase in unemployment, how much time do we actually have, okay? Rising rates and rising unemployment. Here we usually have 43 months, okay? Which is relatively long in the crisis. Here, we anticipated subprime, so that is something different again. We will discuss why. There, we can say that it is still something different at the level of this crisis of the 80s, finally, of the dot-com bubble, because in this case, we already had rates which were relatively high and the same for before. So why did we have high rates? What is interesting to see is that we are going to add, once again, you will see, an indicator in which we will indicate the inflation rate here. And there, it's very interesting. That's where we see that we are still in a dynamic that is a little bit different. We had inflation, which was relatively low in all these crises, relatively low compared to the time in which we had inflation here, which was still close to half of what we had at the level from the top. As a reminder, we have inflation, which was very, very high in this area. We were in around the 9%, almost 8% in bananas, and there we were around the 4, 5, 6% in the 90s. And we see that we have inflation, which has decreased drastically, and in particular, a reduction in inflation systematically linked to these characteristics of recession. What we must draw from this analysis is that we have patterns which are identical, in which we have an increase in rates, implementation of the pivot, and then we have an increase in unemployment, which bursts, and the establishment of a recession. Here we do not yet have the pivot. We are still in this acceleration phase. This phase of additional acceleration was very strong. We see that we have an increase which was really impulsive, in which before we still had something which was more in the form of a staircase, in which we had an increase which lasted. We were on almost 2 years of increase, in rates, whereas here we have an increase which was really drastic in almost 17 months. So we are really in a very strong increase, and we are even going higher than historic. So we are really in a process which is different, in which we have inflation, which is really very strong, which is driven mainly by energy, by a disruption which was carried out precisely by COVID, in which we had a monumental monetary injection, and above all, a real disruption of the vectors of production, in which China started to stop, in which we had a difficulty in accessing services, a difficulty in accessing goods, an increase in transport costs. In short, we had something which completely called into question the world market. We have to understand that we have these two typologies. We have inflation, which is not linked mainly to a wage employment loop, which we can usually find, and which are the usual inflationary loops. We are in something where we are in a real disruption of the economic world order. And in fact, we are in the process of catching up. And now the question we are going to ask ourselves is here, are we really in a first descent pattern? And so we risk having an increase like that in inflation. So there we will have an approach that will be completely different, or are we in a small rebound to have a bearish continuity? This little rebound is going to be really important, and this is going to be the end of the year overall. This end of the year, we will determine whether or not we will enter a pivotal phase, whether or not we will find ourselves with inflation, which will be galloping due to an increase in hydrocarbons, and in particular, oil. And that's really the answer we're going to get, because we clearly see that we have a change in unemployment. When we look at the RSI level, what do we see? We see momentum building. And this momentum, which is increasing, is always systematically linked to a real increase. We can clearly see here the increase in the RSI, which is predictive of the real increase in the blue curve that we see afterwards. So here we are saying to ourselves that potentially we are going to have here the impact in terms of unemployment, which should arrive soon, which holds up very well compared to the drastic increase that we have had. But I think that we are going to have an increase in unemployment by this end of the year, and behind it, the implementation of the pivot at the end of the year and the start of a recession, which will set in overall at the end of the year, beginning of the year, 2024. And there it will be very interesting to think about that, because we have several things. First is what the impact is going to be on the American macroeconomy. A bit like in American microeconomics, what are we going to do? We are going to release the same indicator. We are going to put the recessions. Recession, we are simply looking for recession. You will see that we have US recession. Generally, I take this one to make it the simplest, and we will see it appear here. We're just going to go monthly, just to always have this path. Or even, yes, we're going to stay in monthly, as it will be simpler, and we're going to go logarithmic. You will see that immediately we will have a vision which will be a little different. We see that we systematically have the low point, which occurs in recessions. Here, the same after the recession, here in the break of the dot-com bubble, and we will go back each time here, the same here. So what is interesting to see is that here we could say that in this representation, we are in a dynamic of saying that the recession will lead to a low point, and therefore behind us in our vision, very temporal, we will say to ourselves that our low point, it will arrive in the recession which will take place, and therefore in this approach, we would have been in a wave 1, 2, 3, therefore with a classic A, B, C, and something which would potentially retest here the 3,200, 3,300 that we had as a target almost a month and a half ago. So what is interesting is that in this view, I am for and against, but above all against for a very simple representation. This is because we are in a recession process which is different for several things. One, what I explained to you before is that we have inflation which is galloping initially, hence the increase in rates. To prevent inflation, we are not taking a different approach at all. We are in an inflation which was created by a disruptive shock to the global economy with a monumental injection of liquidity. And that aside, we are once again here in something that is different. That is to say that the stock market has already had a form of very strong pricing. We already had a breakout before this recession, whereas when we look at it anterior, we don't have a break before, okay? We don't have any breakage at all. The breakout begins at the time of recession. And it's very important to understand that we have already had a bearish breakout and an effective retracement, mainly linked to the advent of artificial intelligence, the advent of a new industry, and the injection of monumental funds. So we already have a total disruption. And for me, this is where, for my part, I think that we can arrive at a soft landing and that it strengthens on that side because we are in the process of establishing a recession, which will be different from the others because it is linked mainly to inflation, which is effective and which can be controlled through the transformation of the world economy and the creation of new links at the level of the disruption that we had in COVID level. And that's why I think we'll have a recession. I think this recession will lead to a downward trend. This downward trend I'm aiming for is 4,100, 4,200. Why not? We could go lower, go and retest the low point here. But for the moment, we will not necessarily go lower unless we have new signs that we have behind an oil that flies into the $100, $150. And there, yes, on the other hand, it is sure and certain that if we have an oil which will fetch the points, highs that we have been able to experience in this part, in the $150. There it is sure and certain that we will have inflation which will be around 6 minus 7%, with behind interest rates which will be around 6 minus 7 minus 8%. Why not? And so there, on the other hand, it will be carnage at the level of the economy. There it is sure and certain that we will seek 3,200 at the level of the SPF 500. But we are still very, very far from this ideology. We are no longer in a representation of a bearish breakout. Retest to have a bearish breakout, okay? So here we are in a high range in which we break bearish. So for me, we are not in a retest here because the retest should have been much higher if we had not made this bearish breakout here. I think that, in fact, I could have thought that we are in a retest also here. This is not the case. Technically, they are telling me that we are rather in a breakout bearish, retest bullish to make a continuity of trendy, okay? So it's an additional element that fits into this notion of soft landing that will arrive there. Okay, so that's my representation. We remember at the end of the year, at the beginning of the year 2024, which represents overall Q4 2023, Q1, even Q2. Why not 2023? Therefore, something which will represent 6 months, 9 months. Why not 10 months here of recession? The time we put it in place, the time we announce it, the time it happens, which is rather classic. We start to have signs which tell us that it will be put in place, but that will be relatively done by construction, even from this recession. Now, how will it be characterized at the level of BTC? How will it be characterized at the level of cryptos? And above all, how we will benefit from it, it will be really very important. For that, we have to take back the BTC and actually get back into position. Here we are in weekly. We see that we are in a retest zone of rupture at the level of 5,200, in which we has been in a build-up week off for some time already, and we are simply working in this area. And we will certainly break this part. If we don't break it, that implies that we're going to do something like that, a ranging zone. I've already spoken to you about all that. We're not going to go back on it. But let's admit that we enter a recession, that we have a downward trend at the level of the S&P 500. That implies that behind it, we will have effective pressure at the level of BTC. This pressure will arrive in the breakup of the 25,200. So that means that we will go and retest the 22,000. So that's a bit of the representation that I have on my side. That is to say that we will have something which will be controlled. We know that we have a form of real decorrelation between the BTC and the SPF 500 have been going strong and low for some time now. Yes, when the SP 500 falls, the BTC falls, but before we had 1 for 5, okay? Now we are more in a form of 1 for 1, even 1 for 2. That is to say that I fall by 1%. Well, I have 2% in terms of BTC. Before it was even 1 for 10, you could say I fell by 1%. I took 10% in the BTC. We are rather in this dynamic. We have a reduction in liquidity. We have a reduction in institutional exposures. So for me, we will have a fall which will be controlled. We could even potentially consider going after the 18,000 and 15,000, okay? So which is a bit of the idea that I regularly defend to you in the CME, in which we can see this break very clearly, and the dispatch that I have been making to you for some time, in which we are going to look in. The CME, you will see that we have my first reload zone, my second reload zone, and even my third reload zone if we ever retest this lower part. What is also interesting to see is that when we look at the momentum that is being built, we are going to return here to the other control. We return here. We see that the RSI is in a rather bearish approach. We are moving towards that. So we have momentum, which is telling us that we are weakening, which is rather logical because we are in a classic decline zone. We will have a bearish impact, yes, but what will also be interesting will be to look at it monthly. In monthly terms, when we look, we see that we also have an RSI, which is in a process of decline to have bearish continuity. There's also another indicator which is important to look at, especially in the long term, and which allows us to have a form of consistency and momentum. What is interesting to see is not necessarily the price, it is how the flows are directed in relation to the price. So we have the RSI, which helps us see this. We have another one which is called the stochastic, which I generally use to confirm in a form of confluence of the idea. And what is interesting to see is that monthly we have arrived in a zone higher than the stochastic level, which tells us precisely that we are potentially going to breathe. So we have to take this with a grain of salt because it is not said that the stochastic is that high and therefore we will inevitably go down. As in the RSI, we can have continuity of work in bullish zones without it necessarily taking place. But here, the fact of arriving in this high zone tells us that potentially here we could have a drop in momentum and precisely a drop in liquid injection that could occur. And when we look a little at the level of the SP 500 and we also look at the stochastic, what do we see? We see that we are in a zone of precisely an overzone, okay? So we are in a potential continuation zone, or rather a reversal zone, to have a bearish fall. So these are elements which tell us, okay, we are careful, we are in a peak zone in terms of recession management, and technically we are told that we are here in a momentum which potentially is already overexposed. So behind it, we could have a breakout which could be relatively strong. And what is also interesting to see is that we are going to do the same thing here in this area. And what is that? It's oil. And what do we see about oil? We see that we have here a reacceleration of the stochastic and that we still have a little room to return to this zone. So potentially in this retest zone, here, before having the bearish continuity. So this is where I tell you that already in the monthly stochastic, we are on oil quite high. So I think that we are not going to go very, very high either for a bearish continuity, a strengthening. Okay, in this momentum, we understand a little bit. We keep all that in mind because we are going to move forward. You will see that it will be very interesting because this time we're going to put ourselves in this vision of what is the opportunity. Will the opportunity be found at the BTC level? The opportunity in terms of BTC, I think, yes, there will be an opportunity in BTC to be found in the reload zones that we have defined ourselves. So generally 22, 18, 15. And personally, I would be inclined to tell you that I would buy in that area. For what? Because if we are in this zone of apathy that I have been defending for some time, that means that we have a range zone which is located here, which is also the accumulation zone. We have the start of accumulation with an STB here, and what we are waiting for is a spring. We know that spring can always be an eventuality to go and do a final checkout, do a retest and a bullish breakout. Are we going to go find the 10,000? No, I do not think so. I really think that we will potentially go as far as possible to look for the 15,000, look for the 18,000, which would be for me the optimal reinforcement zone, which will be my reload zone in which I will shoot a big bullet to be able to continue my work. So why am I telling you that the opportunity is not necessarily found on BTC? So yes, BTC is what BTC represents, but in the very opportunity, why is BTC for me not necessarily where it will really play out? Because here we have something, an asset that is very strong, okay? That is to say, a truly force of resistance, and we see it in the establishment of this resistance in relation to the recession and the fall that we have already experienced at the level of the SP 500. For me, BTC will not suffer too much. On this, you will tell me yes, but what will happen to BlackRock ETFs? First of all, I think that they are not going to be validated right away. Imagine that if it goes into recession, clearly there will be a banking impact that will occur. We will have a banking fear. We have bank runs that will be put in place. And so at that point, we will not give people the possibility of easily expose yourself to BTC. We will not let liquidity leak. In something that is uncontrollable, in which it is not the dollar, it is not in an American dynamic to let this happen. We understand well that it will not happen right away. It will certainly happen at the end of the end of the end, in which we will even have, why not a rejection to resubmit new requests, and that behind it will be validated subsequently, therefore, because we are aiming for March, but for validation. Imagine it's denied in January, okay? What is happening? We are still going back to 45-day sessions, which can be postponed. And so at that point, we'll get to June, July 2024. Once again, there is not, well, for me, there is not a world where the USA allows the possibility of liquidity fleeing BTC if ever there is a crisis behind recession with precisely a banking crisis. So for me, we have to keep in mind that this is something that will take time in that regard. So, okay, but then where does the opportunity lie? For me, the opportunity lies here, is located on Total Market 3, which represents all of the altcoins without BTC, without Ethereum. For what? Because we see that we have something which is very weak, which is much weaker than BTC. If I put the BTC here, we see very clearly that here, at the time when we were making tops on tops, we had something that was rather descending and we did not make a bullish break, unlike to something that took place at the level of BTC where we made a bullish break of this zone, okay, of this break. So we had here at the BTC level, if we had to do the same thing, we would have done something like this. Okay, to position ourselves here, make a retest, we should be in this area. Here, this is not the case. We're almost retesting the lowest, okay? So we are in something that is much weaker. This form of bleed that we have, this form of bleeding that we have in altcoins is really very strong, and we see it a lot on certain altcoins. I give you regular updates to tell you that be careful, we can go lower, we can look lower. Even on altcoins that are launched, which are in bullish periods, clearly if we have the onset of a recession and we have a bearish breakout, I can tell you that we will retest low areas. We will even make why not lower lows. And there we really have to put ourselves in mind that this is where we are going to have big opportunities. This is where it will be interesting to reposition ourselves on altcoins by saying to ourselves, okay, at that point, we can look for more. Down. Where can we position ourselves? Already for me, the first zone will be here, this lower part here, which is an effective retest zone there. For me, we will return there quite quickly. If we ever have a breakdown of the BTC, we break the 25,200. We will look for 22,000, and we will look for this area of 18,000 minus 15,000. What can we set as a target? We can set two targets for me here, which will be here in this area. For what? Because on a daily basis, we see that we have the beginning of an order block and the beginning of resistance, which could be nice in this area here of the 200, okay? In the 200, this implies that compared to the current state, we will take 35 less in the head. If we look further down, that implies that we are going to look for the 18,000, the 15,000. What can we have as a target? For me, it's going to be lower. It's going to be here. So at least 50% on altcoins, we're going to look for this order block there. This order block is very important because it is the retest that we had here of the zone. Here we had an accumulation, first retest. We made a first break, therefore confirmation of a change in break-off structure. We retest the break zone here and we accelerate. So for me here, we have a lot of liquidity waiting. So it would be logical to have, if we have a breakdown in BTC, a retest at the level of altcoins in this area. What would that imply? This would imply that on your classic altcoins, we would have a minus 20, minus 30, minus 40, minus 50% compared to at the current level, we could lose the valuation by half. And so we would arrive in real zones of long-term accumulation specific to the zone of lethargy. All right, the principle of lethargy is that we have the establishment of ranging zones, which we can find here at the BTC level. We're going to head here instead, all right, ranging area. We're going to see something like that. Hop, we break, bearish, we start again, hop, talk, break, BTC level, start of the bull run. And so there we would have a break with a sphere acceleration, return of liquidity for the start of the bull run. And that's a bit of the idea that we have. So for me, we would have this bearish breakout, this representation, and something that we know. Look at what happened in 2018. Look at what happened in 2016. These are always elements specific to this lethargy in which we have a retest bearish. There we have a bearish rest, which is unfortunately accompanied by a possibility of weak recession for me in the USA. And therefore, this implies that we will have an even greater opportunity to strengthen our positions. And therefore, for me, the game will really build now. We have indications that are strengthening in this recession. We have elements that are important. We have had the upward acceleration, the breathing, in which now we are going to look lower to strengthen. That doesn't mean that I'm bad on the market. Far from it. I'm bald, even very, very bald. It's just that I'm simply going to be patient in this area of weakness. Am I still in DCA? Yes, from the moment we broke up, precisely this breakup here, I told you that I was in DCA. From the moment we broke in this lower part, I increased my DCA. When we got back into this high zone, I reduced my DCA, but I'm still in DCA. We will enter the lower part. I will have my DCA further behind additional liquidity injections. That's my target on BTC, and that will also be the case on my altcoins. Altcoins at the moment, I am decreasing the DCA because I am waiting for us to enter long-term reloading zones in which we will potentially make lows in which I will have the capacity to be able to strengthen my wallet to be able to take advantage of the bull run. And that's exactly what we are heading into, an opportunity. Once again, we will have to be patient. We will have to live with this fall because we are already exposed. But at the same time, this exposure implies that we do not have this fear of the false word. we do not have if we ever see a candle say, I must buy, because we won't get trapped precisely, because we are already exposed. But exposure also means that we will have to manage the feeling of a decline, and that must be managed. That's why I give you daily updates. That's why I talk about it regularly, precisely to show you that it is something that can be managed very well when you get used to it. And the more you get used to it, the more you learn. And the more we learn, the more we are able to invest for the long term and be patient. Once again, don't forget this notion of patience, which is really essential for trading, for investment. Never forget it. I hope you liked this video. In any case, I was a little longer than usual because it was important to give you this idea. We're meeting tomorrow to do a checkup on a lot of altcoins, to come back to classic reloading zones where I'm going to position myself, what I'm going to wait for to position myself. We'll go back to a lot of drinking and see you at 8:30 tomorrow morning.